Braut sich an den Märkten etwas zusammen? Risiken gibt es ja genug, wie die drohende Rezession oder die hohen Zinsen. Wie gefährlich ist also die Lage? Darüber habe ich mit Ludovic Supran gesprochen, Chefvolkswirt bei der Allianz. Ludovic Supran ist Franzose, er antwortet deswegen auf Englisch, aber ich denke, du solltest keine Schwierigkeiten haben, ihn zu verstehen. Ansonsten aktiviere einfach die Untertitel, hier findest du eine Übersetzung. Und damit willkommen zu einem neuen Interview bei Reni will Rendite. Ich bin Clemens. Hallo Herr Supran, schön, dass Sie Zeit haben.
Hallo Herr Schumann-Fink, das ist mir eine Freude hier zu sein.
Wenn man sich die Märkte anschaut, dann scheinen sie doch recht ruhig zu sein. Die Volatilität ist zum Beispiel sehr niedrig. Ist das gerechtfertigt oder ist das eher eine trügerische Ruhe?
I think that the low volatility that we see on the stock market is actually not a very good news because it is the opposite side of good performance. So the VIX, for example, is at a very low level, below 20. That is usually not a very good measure of future volatility to come. What I think is particularly important to watch right now is the so-called entropy on the financial market, on the stock market. That means the fact that very few stocks have made the bulk of the performance. In the US, you have 6 stocks that made, 85% of the performance. And some stocks in these 6 stocks, like Nvidia, have made plus 150% at the beginning of the year. For me, this is the bed for a lot of volatility coming forward, especially as monetary policy normalizes, especially as financial accidents maybe increase. So I think, unfortunately, markets are a bit too calm, to be honest, lately.
Welche Gefahren sehen Sie denn gerade, die auf die Märkte zukommen könnten?
Well, I think the biggest risk would be the so-called AI bubble. Do we think that the performance of these very few stocks is, a bit of hype? Because the fundamentals of these companies are hard to assess, right? And we had that before. This fear of tech stocks being overvalued has always been there. So there is always this idea that at one point, either there is exponential performance, and that is what markets are saying, or we realize there is a bit too much hype and there is a correction. And for me, there is indeed a dot-com bubble remake that is very visible in some of the indicators that we look at, like price-earning ratio and some of the peer comparison and so forth. So that's the first one. The second risk is more financial market stability or financial stability. We've seen with the very strong hike in interest rates a series of financial accidents from the banking crisis in the US, to the pension crisis in the UK. And so the question is whether there are more financial accidents. I believe there are certainly more financial accidents because financial stability is often what stops a hiking cycle. And the third type of risk, which is very macro related, is this idea that the policy mix, so the articulation of monetary and fiscal, get it massively wrong. The fact that maybe central banks stop hiking too early and that we have very strong inflation for a longer time, the fact that the unplugging of fiscal support needed because of fiscal consolidation creates recession. So there is a very technical reason, this so-called AI bubble. There is a very financial stability reason. With this environment, there is more financial accidents and market could be scared. And there is a very macro reason, which is we're still not out of the wood with the fight against inflation and the fight against recession, which is very important for the second half of this year.
Was den Kampf gegen die Inflation angeht, rechnen ja die Märkte damit, dass die Fed schon bald wieder die Zinsen senken könnte.
In our scenario, we think the Fed is done with hiking, but we think they're gonna stay at this level of interest for at least the next 6 to 9 months, which would be a very bizarre hiking cycle anyhow. A hiking cycle usually stops with either a recession or, a financial accident. So we hope for maybe a very mild recession, but this would be only in the second part of the year for the embedded tightening to get its effect. So for us, the markets are very optimistic with the pivot towards the later part of this year. But I think it is feasible. It really depends on how much the real economy will suffer from this very strong financial tightening, right? In Europe, it's different. I think in Europe, we still have a very sticky inflation on food, but also on core. And so the problem is that the ECB still has, I think, a couple of hikes to do, and then will also stay, at 3.75 or so, at least till the end of the year. So again, we expect, if there is a pivot, for the ECB to be, rather mid 24, for the Fed maybe at the turn of 23, 24. Right now, markets are a bit optimistic, I would say, on the pivot.
Was heißt das denn, wenn die Märkte ihre Zinserwartungen anpassen müssen?
That's the issue, right? I think the markets are expecting. I mean, first, there's been a gradual correction on expectation for the past 9 months, right, or even a year. So I think markets continue to undershoot slightly what central banks are doing. Somehow, the financial accidents of the first quarter have given them some room for undershooting. The undershoot is small, so I don't think there will be big correction when they finally realize that central banks are a bit more determined to keep interest rates higher than before. But a scenario a la 2022, when markets actually realized this the hard way, with this bond and stock market collapse, is still plausible. We don't think we have such a transitory versus sticky inflation type of moments now. The issue is more, a quarter of a difference in expectation for the pivot, and maybe 25 to 50 basis points for the terminal rate. So I don't think there's going to be a big correction, but what is sure is the fact that central banks are data dependent is for me, and that they dropped forward guidance is, of course, a reason for more volatility and more correction, because that means central banks will have to unplug or to stop hiking or to pivot when they see the recession in the data, which means they're already too late, And I think somehow markets are not ready for this moment of aha, where they're going to be like, okay, we have done as much as we can, and now the real economy is going to absorb the excess inflation. And so that's why I'm a bit concerned about volatility from a macro perspective going forward towards the second half of the year, when markets realize that central banks will go till a recession. Then when there is a recession, they may be a bit late to cutting rates because they will be afraid of stagflation. And so that's when markets will be a bit reactive. So, for example, our expectations for risky assets, especially for stock markets, is a correction in the second half of the year compared to the very good performance of the first half of the year. And our expectation also for the bond market is that we call for caution on this whole story of fixed income is back, income is back. It's great to hear. It's true, bond markets are back, but with a lot more selectivity and for buy and hold strategies. And so we need to have a bit more visibility on this policy mix before being sure and convinced that this is a good time to invest in the bond market for good. Maybe in the US, the time is ripe. In Europe, I would wait for another quarter or so before I decide to go full in on the bond market for reallocating portfolios, for example.
Sie hatten kürzlich in einem Interview vor einem Minsky-Moment gewarnt. Was meinen Sie damit?
Sometimes I like to reread forgotten economists. So not that Minsky or Kindleberger are forgotten economists, but they've written a lot on the 29 crisis, and a lot of people looked back at Minsky and Kindleberger for guidance during the 2008 crisis. So that's where this Minsky or Minsky Kindleberger Fisher moment comes from. The idea is, how do bubbles form, especially through leverage, and how they release into the system. So what is the genesis of financial crisis, basically? I mentioned to you my concern about the dot-com bubble in the US moment, so a 99 type of scenario. I'm much less concerned about the 2008 type of scenario, I believe what I meant in this interview is I'm very concerned about the concentration of stock performance. And I'm very concerned about how this hiking cycle will end, because we have very strong leverage everywhere, and if I think, unfortunately, of balance sheets of agents, I think in 2001 or 2000, the leverage balance sheets were the corporate sector. In 2008, it was the household sector. And in 2023, it's the government sector. Because for COVID and for the war, we transferred a lot of wealth from the public sector to the private sector. And we have very strong debt for governments, right? So my concern is, I know how leverage has been built. I see signs with these financial accidents, mushrooming everywhere. So there is some resemblance to the antechamber of a crisis. So I don't know how the release of the pressure will happen. I hope it will be soft and smooth. It rarely happens this way. So my Minsky moment call was, let's be careful about bubble forming in the equity. Let's be careful about leverage or hyper leverage, especially in the corporate and government. And let's look at policy and the policy toolbox to avoid this: supervision, macroprudential policies, regulation, and of course scrutiny and monitoring. I'm a big believer that we can do a lot to prevent further financial accidents that would have systemic ramifications. And we need to be ready to circumscribe any form of risk. Imagine if we have a banking crisis in Europe, which I don't think is very high likelihood, because we had a banking crisis in 2012. So we've done a lot of house cleaning. Yeah. But if we had such a problem in a smaller bank or something, how would we react? When I see the determination with which the Americans reacted, with which the Swiss reacted, with which the Brits reacted to the pension crisis, if we had some financial stability accident in the euro area right now, we haven't finalized the banking union, we haven't finalized the capital markets union, we still are a bit hesitant to put money together. So yeah, these are what keeps me awake at night. And so I hope we can avoid a full-fledged Minsky moment, but the signs are what they are and the facts are what they are. So I'm a bit more on the cautious side right now when it comes to the risk of a financial market correction, and how prepared and how determined we would be to handle that in the best way possible.
Nochmal kurz zur Tech-Blase, die Sie sehen. Sie sprechen ja davon Aktien wie Alphabet, Apple, Microsoft, Nvidia, die ja alle sehr stark performt haben seit Jahresanfang. Sie haben das Beispiel Nvidia genannt. Auch Meta ist stark gestiegen. Was war da der Treiber und was könnte der Auslöser für eine Korrektur sein, die ja, wenn man sich das Gewicht der Aktien betrachtet, den Gesamtmarkt nach unten ziehen würde?
There are, three concerns. The first one is indeed the hype. The fact that some of these companies are certainly very capacitated when it comes to AI, but are they as strong as what investors are believing they are? I have my doubts. I think in the first phase of technological innovation, the valuation of so-called companies that are strong is always a nightmare, because you have to put some form of exponential factor, and it's very hard to know whether you have to front load this exponential factor or whether you have to see some form of, pit stop performance. I think, I believe that they have made very serious investments in being AI champions, but remember the hype about crypto, remember the hype about blockchain, remember the hype about, all of that was 2015, 16, the environment has changed. These companies are very profitable, but the leverage is much more expensive. The talent war is much more expensive. The idea is, it's not the same environment for exponential returns on the tech like we've seen before. The macro environment has changed. Secondly, complete uncertainty on regulation. And so there will be a regulatory tsunami. Just look already at how people reacted to ChatGPT. And so how will investors price in regulatory volatility on AI for these companies? Because right now, the US still hasn't made their mind. Europe still hasn't made their mind. China still hasn't made their mind. And some of these companies, super performance is also, working in a world where globalization is frictionless. And I don't believe this is the world we're in today. So I would be, I believe interventionism and fragmentation are the new normal. And so for AI superstar companies, they need to be, they're very good with lobbying, but they need to be also very good with preparedness. So I think there could be some correction depending on how strong and how cumbersome some of this regulation could be. And the third element for correction is the general correction in the economy. If there is a recession, demand for business services for AI will drop. CapEx will drop. If there is a correction, jobs will be at risk, and therefore there will be maybe a less strong push for AI to replace some of the shortage of labor in the white collar jobs that we've seen, right? So I think these stocks are not immune to the cycle. And so if there is a form of deterioration of the economic environment, of course, those companies that have accrued the most benefits will be also the one that will be the most affected.
Noch ein paar Worte zum Schuldenstreit in den USA. Wird es wieder glimpflich enden oder könnte es dieses Mal kritischer werden?
I believe it's very interesting how Americans like to play with fire these days. And this shows polarization, right? The Republicans calling for default, the Treasury Secretary saying the ultimatum is now, it's June 1st. The 14th Amendment, which nobody had heard of before. I think the situation is more serious than the past shutdown under, at least under Trump and under Obama too. I think it looks like a 2013 type scenario. So it's not good. There are, the first option is maybe Biden needs to revise down some of the spending. And it's true that the spending is massive. The second option is indeed a form of organized, national security force majeure, which would be very detrimental to markets and dislocating market. And the third scenario is a full default. I still believe in a good outcome. I think there is a bipartisan way to reduce a bit the expenditure. The US is the ultimate safe haven still, but the debt servicing cost of the US has skyrocketed. And of course, the Inflation Reduction Act and the reloading of fiscal stimulus is incredible, right? From the pandemic to the energy and cost of living crisis, now to this industrial policy. I think there needs to be a form of reining in of the US spend. But I believe the firmium, which is these 100 basis points of additional benefits on the US Treasury, will disappear in an orderly way with a good bipartisan outcome. They may kick the can down the road to September. So we may have again a discussion in September about debt ceiling and shutdown and so forth. But I don't see how Republicans could push the US into default and think they would win the 24 elections. Or I don't see how the Republicans would really organize and manufacture a default when you know that this would mean that their own parents may not get their pension or may not get their social benefits. So but the world has become cuckoo in many ways. So sometimes you don't know what politicians are ready to do to make a stance. Again, it's unfortunate that it takes all of this attention when there are so many other things to work on right now, from the silent war against climate change to inequality rising, to making sure we don't poke the panda bear too much, because that could create a lot more disruptions. But hey, the comms The communication moment is about debt ceiling. So everybody is writing about debt ceiling. My team is writing about debt ceiling. We're still optimistic, but we cannot rule out a more serious situation, at least this 14th Amendment situation, which would be quite consequential for the bond market.
Herr Supran, vielen Dank.
Vielen Dank, Herr Schmidt-Fink.